Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Alright, for the next few minutes we're going to be looking at Bitcoin. Now, some very interesting developments in Bitcoin. So what we're going to do today, we're going to do as we always do. We're going to start with our Elliott wave count and look at our basic technical analysis afterwards. But we're going to be digging into a little bit more evidence today to try and understand the recent price action. In my last video, we spoke about this triangle pattern here and how we were waiting for it to resolve and break to the downside. Well, we had a break to the downside, but we've since had a pretty vigorous bounce, which has come back up and invalidated this triangle. So we can only assume that either the triangle completed and did make a new low, but it was a truncated low and did not reach any of the lower targets, or we're in some other kind of corrective pattern, which we're going to think about and take the count apart and try and figure out what that is. So I did mention in my last video how there's always the likelihood that the thing everyone is expecting to happen doesn't, and I put forward the possibility of a truncation and that we would break down, not reach new lows and then bounce like crazy. I said it wasn't very likely, but because everybody was convinced that we were looking at a triangle breaking lower, there was always the possibility that the opposite would happen because no one was expecting it and we would bounce higher. Well, that has happened. In retrospect, I wish I'd put my full weight behind that opinion. I would look quite clever now. Unfortunately, I only put it forward as a suggestion. But either way, now that it's occurred, we now have to consider what it means. So, without further ado, let's go through the first scenario. So the first scenario, which we've been talking about for a while, is that the count was correct, it just didn't resolve the way we expected it to. So we had 5 waves down in a wave C of an expanding flat like this. So we put in our B wave top here, then we came down in 1, 2, 3, 4 was this triangle we were talking about, and then we had a breakdown in a wave 5, which truncated and completed before the wave 3. Now, I'll be the first to hold my hands up and say I don't like the truncation. Okay, we don't see it we don't see it very common in any market, and we don't see it. I can't recall seeing it in Bitcoin, but that doesn't mean it can't happen. It's just obviously very, very rare. So this is currently a legitimate way of interpreting things, although a very rare one, which we wouldn't expect to normally see. However, we have to consider Elliott here when talking about the triangle. So in the Elliott wave principle, it was discussed that a triangle being the penultimate move in a motive wave, the wave 4, can often see a short, sharp and truncated, not necessarily truncated, but very short and sudden wave 5, which will normally make just a smaller lower low before ripping higher. Now, you could argue this is the case here, except we ended with a truncation. There's also the argument from Elliott, which is a triangle can actually precede a much more longer term breakdown in price. Now, this is normally the case where a triangle occurs in a B wave, and then we get a long extended C, which goes on and on and on and on. But in the penultimate move of a motive wave, the triangle wave 4 can precede a very sharp and sudden wave 5. And if we look at what we're talking about here, we're on the 4-hour time frame here, so just see if we actually get a measure. So from top to bottom, this fifth and final move only took 4 days. But to get to the beginning of this fifth wave, this completed wave, of let's say this single motive move of this 5 waves down of the wave C, it took us 50 days to get to the start of that fifth wave. We had to go through 1, 2, 3, long 4, and then this 4-day fifth wave. So that fits the pattern of a very quickly, suddenly resolved wave 5. So some evidence there to support that maybe this truncation is believable. Another thing I'm going to do here, which I don't do very often, because I do believe the wick has to be respected, we have to call this a truncation. We did complete before the wave 3 wick. But if we just come in and have a look at the line for a moment, we can see that we get a very different picture. We get our 1, we get our 2, we get our 3 with no low, no spike, no volatility spike to form our triangle in our 3. We get our 3, we get our 4, then we get a 5. And on the line graph we can see that the 5 is lower than where the 3 is. Now the reason for this is because it's just using closed data for the price, not intraday range of the price. So we end up with a lower fifth than a lower 3, so we end up with no truncation here in the line graph. Now this is not how we conduct Elliott waves, so don't run away with this idea that Tom's cheating. I'm not at all. We use candlestick charts to do our Elliott wave, and we have to respect the wicks. Okay, so I'm not changing anything there. So we come down, as you can see in the triangle, in the candlestick chart, sorry, we get that low of the 3, that big volatility spike, that intraday trading range, which means we've ended up with a truncation. Right then. So that's the first count. Now let's have a look how we've come off the low. Now we have come off the low in a highly convincing manner. And what do I mean by that? Well, I haven't bothered labelling this recent price action, as the initial 5 wave up and 3 wave move back has been enough to convince me that we're impulsive. Now, we may be impulsive inside of the corrective structure, or we may be impulsive in a 5th greater wave degree higher, and we're not going to stop. We're just going to keep impulsing up. So what do I mean by that? Well, I say we've got a clear 1, 2, 3, 4, 5 waves with subdivision in the 3 to 2 lesser wave degrees, nice and clearly, and then we've got a nice clear 3 wave move back, and then we've got a move out of there. So 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5 waves in the C subdivision, 1, 2, 3, and off we go. Now we're impulsing higher again. So this is strong evidence that we bottomed, in my opinion, and that this very rare truncated occurrence may have actually happened. And it could possibly be purely because of this extreme volatility spike here that we've ended up with this truncation. So for the moment, this argument is valid, and it's going to stay on our, on our charts that this was a triangle. It did complete as a triangle, and that the count I presented was correct, but we just did not get those lower wave targets. We got the truncation instead, and are now heading higher. Like I said, I'm not happy about it, but this is how I see it. So before we say Bob's your uncle, there you go, let's have a look at some evidence here I also want to present as to why this very rare occurrence could be the case. We're going to go over now, we're going to have a look at Bitcoin shorts. Now, the first thing you should notice here, obviously, is this gigantic spike in short positions since we've bottomed, inverted commas, because the shorts are either finding themselves having chased the breakout of the triangle and now got themselves underwater, and they're having to cover, and this is resulting in the beginning of a short squeeze. Bold statement, but it could be, because we've had an increase in short positions since the low, since the breakout of a triangle and that thrust to a new low, of 2,361%. So the shorts have gone absolutely apeshit. And essentially we've been in a downward trend, right, recently, and now the short positions have massively increased. So what I want to look at here is other times we've observed spikes in the short position. So I've taken inside of this range here, right, everything in this range here. We've got the current spike. Well, we know what we're doing here. We're impulsing in the price, and we're going higher, and the short positions are going higher with it. So we've got a spike here in this range, but previously within this range we had another spike which occurred on the 15th of March 2020. So let's just head over to the Bitcoin chart for a moment and look up the 5th of March 2020 and see what the price was doing. What the shorts were betting on it going much lower. They were getting highly aggressive in their short positions and betting on it going lower. Now let's just come over and find the 15th of March. Well, here's the low of the collapse at the start of 2020 on the 13th of March. Here's the 16th and 15th of March here. Okay, we're on the 1 hour chart now. So we put in a swing up and then a swing down, and all the shorts were betting on a further move lower with this spike in short positions. Right, but instead we bottomed and then never came back to those levels and have just impulsed ever since, higher and higher and higher. So let's now look at another spike. So we've had this range here, which we can now see our two spikes, the current one in the shorts and this one back here. Now we've got this topping pattern range here with these lows up to these highs. And we have two spikes here, right, inside of this range. So we pick out the greatest number of tops, which is a 1, 2, 3, 4 here. We've got these lower and a lower range here of tops as well. But if we just box this whole area off, grabbing this low, this low, this low, this low, these lows here, we can see that we get two profound or two obvious spikes within this range to the very peak. We get one here on the 7th of December 2018 and one here on the 9th of December 2018. So let's come back to 2018 for a minute and see what the price was doing, if the shorts were betting right or not, or if they were betting wrong. So let's work our way back in time. The chart cannot load any more data, we'll have to come out to the 2 hour. Where are we? Okay, so here we are. Back in 2018, what have we got? Here's the 8th of December. Here's the 7th of December. So we are a couple of percent off of the low that we made in 2018. We get a move higher into the 9th of December. The shorts double up the spike on these dates here, 8th and 9th. They bet that the market will go lower. It does temporarily. It then bottoms, and that was the low, the 2018 bear market low. Shorts were Bitcoin shorts were trading extremely extremely high at the time. There was a lot of short interest in the market, and the market bottomed very soon after, and then went into an exponential rise. Okay, so that's the March low, and that's the 2018 low. Let's come and have a look at the other spike, which was on the 12th of April 2018. So we've got to come back a bit here. The 12th of April 2018. There's the 31st of May. There's the 7th of April. There's the 9th. There's the 12th. So here. So what do we notice happen next? We have a spike in Bitcoin short interest, a bet that the market's going to move lower, and what does the market actually do? Moves considerably higher. In fact, it makes a 50% move. So if this pattern's correct, and every time short interest spikes violently outside of the established range, the shorts are wrong every time. Every time. The shorts are wrong. They might be right for a little bit of time, a few hours, a few days, but they're inevitably wrong with their positioning. They bet the market's going to move lower, but it doesn't, it moves higher. So that's what we've seen in all these spikes. We have these established ranges, spikes outside of them, and these spikes represent the lows. These increases in short interest actually represent a pivot. And we've seen that time and time again. And now look at what the Bitcoin shorts are doing at the moment. They are betting wildly that the market's about to move considerably lower. So if the shorts are wrong most of the time, not saying they're going to be wrong all the time, but they are wrong pretty much all the time. Are they wrong now? Shorts are doing the same again. They're betting market's going to break down, but the market isn't breaking down. We've got an impulse wave off of the low. A clear, beautiful impulse wave off of the low. So there's every reason to think now that the market is just going to fuck them over and keep going. And they're going to get trapped under ice, which they can't get out of, and they're actually probably going to make their situation worse. You know, so that concludes the bullish argument from a technical perspective as to why we may have bottomed. Like I said, I'm just as unhappy about it ending in a truncation as any other Elliottian would be. It's not something we like to see, but it's a possibility. Okay, so now that we've done that, let's come and have a look at how we maybe can reconstruct this portion of the count to accommodate something else. So we're going to keep our impulse wave off of the low because it is very neat and I like that. But we're going to delete the triangle and consider what on earth could have happened. So let's delete everything for a minute, bar the impulse off of the low. because this could be a C rather than a 1, 2, 3, so on and so forth. So we need to move our minor 4 out of the way, we need to move our minor 5th out of the way, we need to move our intermediate C and our primary 4, because now we're projecting that none of this has happened yet. We haven't completed. We're going to respect the idea that we are not going to see a truncation and we are going to move lower. So this is to the bearish point. So the first thing we need to observe is this wave 4 invalidation point up here, because we can't come back above this. If we're going to put in our wave 4, we can't come back across the wave 1 level here at minor degree. So we need to see a 4 resolve somewhere before 46,983.71. We need to see a resolution of wave 4 before then. So how can we do this? Well, we don't like the triangle. I'm happy with this spike representing the bottom of the wave 3. I'll live with that and establish this as our wave 4. So we need to find some kind of corrective move that can accommodate this low and this move here. Well, what have we got? The first move off of the 3, I think we can see 3 waves. We're going to come down to the 2 hour, try and make things a bit clearer. But I would argue 3 waves all day. Here, 1, 2, 3. Okay, I can live with that. There's a 3 wave move here, so this will be an A. It could be a W. 3 waves in an A. Let's just put an A up here for the moment and see what we end up with. Because I really am just doing this on the spot to see what we can figure out. Now we've got an issue. Now we can either perhaps we can form a triangle from here. It's possible. Maybe we can get a B wave triangle. I'd argue that's possible as well. This doesn't really help us though. But let's have a look. I'll explain why. Because all this is going to do is result in a truncation. A, B, C, D, E. Well, nothing resolves higher. So we don't get a move up off of the wave E. It breaks down. So this doesn't fit. This doesn't fit as a triangle. So what if we move a triangle forward into a smaller time frame? Will this help us out at all? So we can say A to here, okay, and then what are we saying? This looks like 5 waves, but it doesn't result in a lower low. It doesn't retrace in 3 and then produce another 5. So this is not 5 waves. Alright, it's just not 5 waves. Doesn't result in a zigzag either. So this has to be another 3 wave swing, probably a 1, 2, and then 1, 2, 3, 4, 5, A, B, C, with another extension in the C. It could also be 3, 3, but we do seem to get 5 waves here, so I'm going to say A, B, C. But look, I mean, it looks like a zigzag. Can we get 1, 2, 3, 4, 5 here, perhaps into a zigzag? It's a bit tricky. But either way, we don't, after having a 5 wave here, we're either saying that this is somehow a C wave, which doesn't make any sense because we don't get the A, B, C, we don't get the A and the B move before it, and it can't be impulsive, it doesn't make another low, and it doesn't result in a further impulse wave. So what are we looking at? Could we say 1, A, B, C, 2? Well, we've only had 2 waves so far, 5 wave and 3 back. So how are you going to fit another 3 waves in this before this high? So the idea of this being a 1, 2 inside of the 5, that doesn't fit either. A, B, C, A. So how about we go for a minor wave move here and we say A, B, C, A within a B wave. Right, so A within a B wave, A, and then A, B, C, D, E within a B wave, then 1, 2, 3, 4, 5 within a C wave. That ain't pretty. A, B, C, D, E. Just, I mean, you're going to have to follow up with me here, guys, because this is literally an opportunity to just muck about and try and figure out what the hell's going on. So what about this? What about we say A on the lesser time frame, smaller time frame. So let's shift this into minor. Shift this into minor. This is going to be a long one. Sorry guys, it's just going to be a long one. You're just going to have to follow up with it. And this is going to come down to minute. Or should we say minuet? So 3 waves into an A, 3 waves into an A, 3 waves into an A, 3 waves into a B, C, D, E. 1, 2, some kind of screwed up 3, 4, 5. Big 1, 2, small 3, 4, 5. Do get subdivision. We get subdivision in what could be a 3. So let's think about this. 1, 3 waves into a 2, then 1, 2, 3, 4, 5, 3, 4, 5. Subdivision in the 3, 3 way, and then 1, 2, 3, 4, 5 moves down in a C. So we get an A, and then all of this, A, B, C, is a B. So now that we've got our A, where's our B? Let's bring our B over here, and plonk it there, and thusly. Right, so now we've got a B wave low. It's inside of our wave 3 low. But that's not a problem, because we're going to expand beyond where the A began in our C. So here's our C wave, going up to here. So now we have 1, 2, 3, 4, 5 in a C, completing a 4 before the invalidation, and then off you go, down into the wave 5. There you go, how's that? Is that alright? It's not great. I don't like this DE move. What kind of retracement do we get inside of this triangle? Let's have a quick look. So let's say first A to the B relationship. This is 707. B to the C relationship. This is 786. C to the... Oh, hang on. Excuse me. And C to the E is... What is that? Hang on, I've gone the wrong way around there, haven't I? Bear with me. Sorry. D to the E. D to the E is a 61.8, so we pick up at least one golden ratio relationship with the internal subwaves of the triangle. And it happens to be on the last DE swing before this rather dodgy 1, 2, 3, 4, 5 down in a C. But I can live with that in order to accommodate what is obviously an impulsive move off the low. I mean, it's just undeniable. You know, you can't count that in 3 waves. You have to count this in 3 waves, right? But you can't count this in 3 waves. This is 5 waves all day. So here's a different alternative which says there is still a triangle here, but it's not where we thought it was. We have a 3-wave swing into an A, then we have a 3-wave internal swing into a B, and then a 5-wave swing into a C, into a 4, into a 5 with a lower low, into a C, into a primary 4, completing the count. So what I'm going to do is I'm going to save this as an alternate, and then I'm going to make another copy. And we're going to say alternate correction 2. Right, and now we're going to try and come up with another alternative. And if I can't within 5 minutes, I will quit and then come back and try again later. So let's just tell the triangle idea to just bugger off, because it just keeps hanging around in all our different interpretations. Sticking with the wave 3 low, sticking with the initial swing here, can we get an alternative movement going on in here? Let's have a think. 3-wave swing into a W. Then this, and this is a 3-wave swing. Yes, it's the same screwed up pattern of the A, B, C that we used in the other one, but this is W, 3-wave swing into an X, and then this is a 3-wave swing into a Y, like that. So 3-wave swing here, 3-wave swing here, and then 3-wave swing here in a zigzag, completing before the wave 4 invalidation point as a WXY, W going beyond where the Y began, X completing before where the, well no it's not, is it? It's going beyond, oh no, it doesn't matter, it's the internal swing. So this is our, the X wave is a mess with a 3 wave move, a triangle, 5 wave move. Okay, so we're saying a 3-3-5, aren't we? But with a triangle B wave for our X wave, and then a zigzag for our Y. Okay, which is yet to complete. This accommodates the impulse wave off of a low, 5-3, and then another 5 wave move here, which is to be A, B, C, zigzag inside of a Y, completing the 4 before the invalidation point, rolling over into a 5. That's that. So I'm just going to leave it. I'm going to leave the counts there now, guys, because otherwise we're in danger of going around in circles. So to sum up, we have bottomed and we are impulsing, and the Bitcoin shorts are wrong again. Or we have not bottomed, we are in a more complicated correction of either a WXY or an ABC. But let me just bring that alternate correction up and make sure I'm not just talking complete bollocks. A 3 wave move, 3 wave move, 5 wave move. So this would be a regular flat. The A, B, C, if we complete over here, we have an A wave up, we have a B that it completes within the start of the A, and we have a C which expands beyond where the A completed into a regular flat of a 3-3-5 before we roll over. So that's legit. Okay, I prefer the look of this over the WXY idea, purely because of the way the impulse wave and the free weight trace step back here has occurred, because I feel like I can see the beginning of an extension going on here. Haven't started counting it yet, I just want to give it some more time. Okay, before I start really digging into this new price action, but it's looking like a possible extension in the 3. We will know, because if we come back above 46,983.71, then this is impulsive, the way forward's invalidated, this was the bottom, the shorts were wrong, and we're going to a new high. And that's it. That's the two scenarios I see. We're either in a more extended, slightly odd correction, but perfectly acceptable one, or we've bottomed. I don't really want to stick my neck out, honestly, on this one, guys. Normally I will happily stick my neck out and say what I think. But I just haven't got the certainty here. If someone put a gun at my head, then I would tell them the truth and say, I've been playing this bullishly since it bottomed. I saw 5 waves up, I saw 3 waves back, I went long, I'm still long. I'm long term anyway, because I have my Bitcoin I accumulate and the Bitcoin I trade, but for me now, the short term, I've got my invalidation point back here, at the bottom of the 3 wave structure, so back at, what is that? 34,624. So 3 wave move here, then we start impulsing. If I'm wrong and this rolls over as a result of a 3 wave zigzag into a Y, then I'm out and I'm happy. You know, I'm not under any pressure. So I guess from a trading perspective, I'm leaning bullishly, because why wouldn't I trade an impulsive structure like this? I might as well. It could still be a corrective move. All right, okay. I'm just waffling now. If I absolutely had to, someone put a gun to my head, I'd say the incredibly rare circumstances of a truncation has occurred. But for God's sake, don't hold me to that. Let's just wait to see how price action develops from here. Right, so that's enough of the count. I really hope I haven't confused you and that I've actually helped clarify things and provided some good evidence as to why I believe what is happening is happening. So let's now look at the not the fundamentals, God, no, ignore those, please. And Elon and everything else to do with it. Let's focus on the basic technical analysis for a moment. So let's clear the chart. Come all the way out to the weekly time frame. Zoom in to the more recent price action. Bring up our exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. Bring up our volume profile as well, see if there's anything there. Okay, get rid of our favorites bar, bring up our momentum indicators, RSI, with a 10-day close, green 30 level over sold, red 70 level overbought. And MACD with a 10 for the short-term moving average in blue, and a 20 for the long-term moving average in orange. Weekly time frame. 2 wicks in a double bottom on the 60 exponential, the orange line. Very, very strong resistance. Very, very strong support, sorry, I should say. Okay. 10 has come over the 20 with the price below it, but we haven't crossed over the 60 with the price below the 60, so no death cross to speak of here on the weekly time frame. Just a period of consolidation. It could be a broader correction before heading lower. We've discussed that, but we could have bottomed. 2 long wicks on the 60 here. Didn't make a round trip to oversold conditions on the weekly time frame. This is either because you could interpret this as either because we haven't completed the correction, like I discussed, and we will make oversold conditions, or there's just such a bullish underlying bid under the market that we don't need to. Then you've got the MACD, short-term moving average. The histogram bars here are turning pale and shrinking, showing a dying off of bearish momentum. We're still a long way from getting that short over the long and the return to green momentum, but it begins like this. So we just need to see another week or two of lessening bearish momentum and the return to green, see what the price action does. No sign of, no definite signal of having bottomed, but signs that the bears are done. And with the shorts picking up, maybe that's evidence. Alright, so let's come down to the daily time frame. Alright, now on the daily time frame, you can see that we've turned ourselves back into a more bullish setup with this base of candles we've got down here. We had, you know, this really bullish hammer, this evening star. Do we call it? Yes, an evening star rather than a shooting star, which is the end of the bullish pattern. So this, we come down into this long hammer kind of candle. Very little body, lots of wick to the downside. We get this huge bullish engulfing candle here, gobbling up 1, 2, not quite 3 days of bearish price action, but 2 previous bearish days of price action. This is our 1 and our 2 in our bullish count, with our 3 now leading us above the 250, the 20, the 10, and curving all the moving averages back up. So that looks bullish in the short term to me. The 60 overhead on the daily time frame may prove resistance. That could be the 1, 2 stopping point for a 3, 4, 5, 1, 2, 3, so on and so forth. Or it could be the completion of our A, B, C zigzag, or 5 waves into a C. Unclear. We did make a round trip from overbought to oversold, quite deeply oversold in that volatile sell-off here, in this volatility spike, this capitulation, liquidation candle, whatever you want to call it, come down to quite low levels on the RSI and have been trending higher since. Trending higher, although we've had lower highs and lower lows, we've had higher lows and higher highs in the RSI. Can't call it a divergence because we never got a lower low, but it's just underlying bullishness in the market. Crossover of a short term over the long term moving average on the MACD. Brighter green bars appearing now. Shorter term moving average starting to accelerate away from a longer term moving average, looking bullish as well, holding above all major moving averages bar for 60. So yeah, that's hanging around our visible point of control. Still hanging around it. With it below us currently, this is what got us into the thinking of this being a triangle. We know there still could be one in here as part of a subwave structure of a wave B into a C, or it could have been a truncation wave 4 of a triangle with a short thrust down, a wave 4 triangle with a short thrust down into a truncated fifth. There's our 2 options. Alright then guys, I'm going to leave it there because I've been waffling for quite a while. So thank you for joining me on this technical analysis of Bitcoin. If you're new to the channel and you like what you've seen, please smash the like, subscribe, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. Thank you as always to my patrons. Your support is greatly appreciated, and of course I'm looking forward to hearing what you guys think about this. And I've already asked you for your ideas on this interpretation because it's great to share. And a lot of us are all in a bit of a muddle at the moment, just trying to make the most sense of what we've seen. So I appreciate your contribution as always. Alright guys, take care, and I'll be back with you later in the week. Bye bye.